What's up, everybody? Today we're going to be looking at whether pre-construction is the right real estate investment for you. Hey guys, welcome to the channel. My name is Paul Sani, your local real estate investor, realtor, mortgage specialist here in the GTA. So today's focus is going to be on a particular building project out in Hamilton, Ontario, which has received a lot of attention, good attention, by the way. And I know that a lot of realtors are going to be bashing me because of this, but I'm only doing analysis just so that you as an investor can see whether or not this makes sense for you and your family to invest in, and how can you, or what are your backup plans for investing. So when you've made this investment, can you actually come out of the game positively and not have to lose your shirt in your investment? So what I've done is I have used this particular unit and taken the best price on that price sheet and tried to use this 1+ den unit and manipulated it to earning rental income based on a 2-bedroom unit in Hamilton, Ontario. So the project that we're discussing is the district project. And now what we need to look at essentially as a real estate investor is, do the numbers line up for yourselves to be able to either carry the mortgage or even if you want to be able to be short on cash flow, is that going to be enough for you to get out of it after, say, a year, and you're happy with that rate of return based on what you initially had invested? So let's take a look at some numbers here. And what I wanted to do was, here's your 1-bedroom plus den, which I'm going to be using it as a 2-bedroom unit. And the purchase price for this is $650,000. And it turns out to be about $1,109 per square foot. On a 2-bedroom unit in Hamilton, you would be able to generate a potential rent of about $2,800. The mortgage cost would be about $2,558. And that is a 30-year amortized mortgage. And it will be at an interest rate of 4.25. And I've chosen this rate because we are expecting a little bit of an increase again in September, when the Bank of Canada announces the next potential shift in interest rates. And that's with 20% down. So that's about $130,000 down on that $650,000 property. Property taxes, again, I'm just assuming that it's going to be about $2,000 a year, which is about $166 a month. One thing to note is Hamilton does have a little bit of a higher property tax rate, but it still falls in line when you're doing your numbers. Maintenance fees are 61 cents a foot at 586 square foot, turns out to be $357.46. Your insurance, I've allocated roughly $120 a month. Fine, if you can get it better, it's okay. Let's just, for this example, use $120 a month, leaving you now with a total expense of $3,201.46. As a result, based on your potential rental income minus your total expenses, you're actually at a net loss of $401.46. Your annual loss now has come to $4,800. So one way of looking at investing is, someone would look at saying, well, $4,800 a year is not that bad, considering I'm going to make $100,000 on my investment, which is totally fine. But what happens there is, you are speculating, you are hoping that the price that you purchased your investment at goes up that much so that you're able to absorb any expenditure or out-of-pocket cost. But that doesn't necessarily mean that's the case in every situation. And as many of you guys have seen now, homes that are, say, in Brampton or Durham region, homes that were, say, at $1.3 million are now selling for $1 million or even a little bit less. So yes, the market has been affected, and I'm not saying that the market is not going to go up. Real estate, as a trend line, if you look at it, consistently rises. So if you're in it for the long term, I don't feel that there are any issues there. You could stay in the game and you should come out fine. And that same goes for the people who purchased their homes at $1.3 million. If they have that time to sit and wait, don't look at your price sitting at 1.1 right now, and it will come back to that point, but in the long term. And if you invest with that outlook, you will always come out fine. So looking at the numbers, if your annual losses are $4,800, now let's look at how we look at what the prices will become in the future. So we're going to speculate that based on our 586 square foot unit at $1,109 a square foot, that we are hoping that, let's say, the price has gone up to $1,250 a foot, which is a good return. And I can actually still see those numbers possibly coming there, but maybe not within 1 year, leaving you now with $141 per square foot as your profit when it comes time to sell. Now, based on 586 square feet, which is the unit that we chose, that is the size, you will have a profit margin of $82,626. So now from this $82,626, you will still have capital gains and an HST to be paid on these units. We will analyze the HST and what you are liable for in pre-construction, as the CRA has changed the rules on HST since May of 2022. Be sure to subscribe to the channel so that you are alerted of when this new video comes out. Now the question that you need to ask yourself is it worth it for you to put in $130,000 and receive a return on your investment of, say, $82,000 minus your HST allocation, which you can get back, and also your capital gains? So capital gains is actually calculated to your marginal tax rate. I am not a tax advisor, so I would highly recommend you speak to your accountant or a qualified CPA that can guide you as to what is the tax rate that you would face when you're selling your property. Although in the previous years, pre-construction was a great investment strategy in real estate and people could make great returns, I believe that in this current situation, in these market conditions, I don't believe that the ROI is going to be high enough, or I feel that you're not utilizing your $130,000 that you've tied up for many years, as this project is also projected to close in 2026. So your money every year starts to deplete in value. Your ROI will deplete. So if your strategy is to speculate and offload the unit through an assignment, that's fine, but you also cannot assign this unit until much later on, or when the building has reached a certain amount of units that have been sold. Keep in mind that you are not able to also, or many builders do not let you sell your units on the MLS. So you have to have a network of groups where you can actually provide the information of your unit that you have without the MLS. Let's just quickly analyze the difference between, say, multifamily versus a pre-construction unit that we're looking at right now. With multifamily, you may purchase the unit at, say, $800,000. You will have potentially 3 to 4 units in your building, and you're able to rent these out for anywhere between $1,400 to $1,600, and probably generate revenues of $5,000. If you're looking at a multifamily that you purchased for $800,000, for example, your mortgage payment monthly would be $3,135. And if you add your insurance, taxes, maintenance, management, make it even $1,250 just for CapEx included, you're gonna have roughly about $4,385 as your total expense. And if you're generating revenues of roughly $5,000, you're going to have approximately $600 in cash flow. That is on top of the equity that is growing from day one, not from when your property, you've invested in a pre-construction and you don't own anything yet. There's no appreciation, and you're only hoping or speculating that it would appreciate by the time you've actually moved in or from the time that you're actually assigning. So there are differences, and it just depends on how or what your outlook is on real estate investing. But I believe that I want my dollar to work for me from day one. I'm just trying to open your eyes to a different perspective instead of just pre-construction is the only way, because many people do not have the capacity to even close on the unit if something has happened. Like, for instance, inflation has affected mortgage rates, and now they're not going to be able to get, say, the speculated amount on the home, but now you're getting probably what you purchased it at, meaning you have to close or sell it for break-even value. So now you've put $130,000 that you've invested for the last 3-4 years, and you didn't even make any money or made a return on your investment. So what good was that? Your money was not working for you, and now you either have to have the capacity to close with today's qualifying rates, makes it even more difficult. If you have any more questions, be sure to reach out to me at 416-832-1211. Let's book that call. Let's go over how we're going to build your legacy.